following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Option Block. This is, of course, your bi-weekly source for all things options related, a little bit of options analysis, a little bit of options trading tips and strategies, a little bit of options education, and sprinkled right on top a little bit of entertainment and or perhaps even hilarity, depending on who we have on the show, and I think we're going to have a good one today. My name is, of course, Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And joining me on the all-star panel today, speaking of hilarity, a man who is non-stop entertainment through and through. I can never get through a conversation with him without cracking up because he is just that kind of guy. He is none other than the man from the mountains himself, Uncle Mike, Mr. Comedy himself, Uncle Mike Tusa from Know Your Options Inc. See, I'm cracking up already, Uncle Mike, so there you go.
Funniest guy in options right there.
There he is. There he is.
I guess I've been called, I guess you could be called worse. At least you're not talking about my trades being funny.
There you go. See, he's already cracking us up, listeners, with his just non-stop, over-the-top material. And
that Apple trade, you maroon. What are you being long that stock for 3 years? You're an idiot. Your clients hate you.
Yes. Why are you wasting money on puts in Apple? Don't you know it only goes up?
I've had that conversation once or twice.
All right, and we're also joined by the man holding down the Options Express hot seat, none other than Sean Fitzgerald from the land of OX. Sean, welcome back to the show.
Always great to be on the show. Sorry, a little late. Was on the phone with the client trying to get a SPX spread in before the close of business. So client's always first, but the show is always in my mind all day long.
Don't you know the old showbiz saying, the show must go on, sir. The heck with the client and those paying trades. Who needs those? And last but certainly not least, the man chiming in all the way from the Kuwait of the Northeast, a.k.a. Maine, none other than the lobster himself, Andrew Giovinazzi, who is doing so well over there in Maine that they're mixing lobster into the mac and cheese for their little kids. That's how great things are in the great, great state of Maine.
I know. Can you believe it? I saw that on my kids' lunch program. I couldn't believe it. That's what Catholic school does for you. High quality, high quality.
The nuns beat you with rulers, but at least they put some lobster in your mac and cheese.
Exactly. There was a time, I have a press clipping from those like 1700 where the help complained that all they got was lobster every day. Because basically, I guess back then the lobsters just sort of crawled out of the ocean and just jumped onto the beach.
They kept saying, why are you giving us these rats of the sea? We want beef. We want real food.
Exactly. You want beef? Screw these lobsters.
Yes, the Kuwait that is Maine. Things are amazing up there, really. Just the lobster oil powered utopia. I need to get back up there one of these days and see it for myself. All right, and with the team complete, we're going to dive right into the trading block.
The trading block.
All right, and that cacophony, that trading bell means it's time once again for the old trading block. And today it wasn't, actually it was a little bit, I'm used to the days of the 0.0% unched on the day. So it's nice to have a little bit of activity to talk about on the day. Today, most of the major indices were up a fairly healthy margin, about 1% on the old S&P. The NASDAQ up nearly 1.5%, and the Dow, ever the laggard, up only 0.5%. That's why we mock the Dow here. Who needs the Dow, right? And the good old VIX cash selling off to the downside, down nearly 2 points on the day, or about 12%. Why don't we start there, as we are wont to do every show, Andrew? How was that 12% sell-off? Was that to your liking? A wee bit overdone, a wee bit underdone? What was your sentiment on that?
I thought the rally was all. I mean, I am going to be sad when this Euro thing goes, because it's been the most dependable volatility fade of any trade. It is. Do I think it's overdone? I thought that's kind of where we came from, We were kind of cruising along at a 14 VIX, and, Spain sneezed and everybody freaked out to like 17. And, the ECB is going to buy their junk. That's the bottom line. They had a couple of riots. Everybody freaked out. And I think the big news actually is for tomorrow, when they basically hand their bill to the ECB saying, hey, you got to give us this much money to help our banks recapitalize. So they pulled the TARP thing, and I'm probably going to see volatility back down to 14 by Monday in the VIX.
Good old ECB. That sounds like the dive bombers are hitting Maine.
Oh, yeah, maybe I should close the windows in my office.
Are they finally striking the Empire of Maine? Have they finally crossed the line? And our forces are moving.
Birdies have escaped.
I will close that door. But no, I'm looking at the products. I think basically they just gave back, and the term structure has got really steep again. So they're basically what the market, to me, that looks like, okay, they don't expect volatility short term to do anything, but that doesn't mean it might not happen November, December again when the next thing. So the term structure got super steep in the VIX futures here toward the end of the day, as they just crushed, the near-term vol. So I'm expecting actually near-term it gets a little cheaper, and which of course that brings opportunities for some of the other volatility products when and if some of these Euro bugaboos can settle down a little bit.
Well, it is nice today. In addition to the movements in the underlying and in volatility, we actually have a legitimate earnings announcement to discuss live here in the old trading block. And we always love those.
Live.
I know. It's been quite a while since we had one of those, a real one, and not one of our joke ones that we throw into the mix every now and then. Good old RIMM. We talked about it before here on the show. Research in motion. It was looking pretty ugly for a while. They're trading south of 6.5 earlier this week, but now rallying hard into earnings and closed today at $7.14. And right now, as we speak, looks like the number is out, and people are saying that at least for the near term, RIMM is looking pretty good, off to the upside, up about $1.25 or so, trading around looks like about $8.25 right now, so a little over $1 in the after hours. And it's funny, I was looking. Oh, go ahead. I'm sure you had a lot of calls on this one today, Sean.
Oh, I did, and a lot of my clients' favorite phrases is, and I don't know if this might have to be edited, is I'm wondering if I'm going to get RIMM jobbed at the close of business today. The ones who went long are going to be pretty happy. The ones who bought puts, especially on the weeklies expiring tomorrow, will be officially RIMM jobbed.
You are going to have to edit.
We're going to lose our clean tag. Well, that could apply to many things. Maybe they're fixing the rims on their cars. And so
this is not my phrase. This This is not my phrase. This is a phrase I've heard many times from clients using. So I don't. Yeah, so I got a lot of clients in today. The usual Google and Apple clients. I decided to take a stab. I got a mixture of calls on the long side and on the short side. I would say 50-50 across the board. People looking for a taste of the RIMM, because if RIMM would have disappointed today, you could be seeing the end of RIMM. But it looks like with the up over $1 in after hours, maybe the net new bold that came out a few months back, people were impressed with, and maybe we'll start to gain some market share back. I don't know how much with the iPhone 5 just released, and I believe the Samsung 3 is really dominating the phone industry at this time as well. But dollar up in the after hours, maybe we'll open some eyes to maybe some of the big institutional traders, and maybe RIMM will have some life a little bit longer than I expected.
Everybody thought Apple was finished a while back. Maybe this is going to be RIMM's resurgence. They're the next Apple.
There you go. You heard it here first. Load up. It's heading to 700. From 7 to 700.
This might be the classic. Now it's time for the old risk reversal. Since it ain't going out. If it doesn't go out of business, my oh my.
You like the bullish risk reversal here on RIMM?
Well, or maybe maybe the bullish calendar. I don't know if I'm fully risk reversal ready yet, but
yeah, I don't know if there's some upside maybe today, maybe putting it on ahead of earnings. I was looking at this yesterday, and this was a classic example of why when you're busy it's so difficult to execute trades. So I was coming up with some different ways that how I wanted to play RIMM. I'm always a big fan of the iron fly. And I didn't like putting it all on an ACH or putting it all on in the weeklies and have it be a couple of day trade. So I thought an interesting way maybe to massage it a bit and make it a little more interesting is do like maybe the 6, 7, 8 iron fly, but have it be a time fly, if you will. Sell the 7 straddle in ACH and then put on the weeklies for the wings, because if there is any dramatic movement, it's going to occur probably over the next day or so post earnings, and so you get a little bit of that bang. And then you could see if it's moving dramatically afterwards. Once the weeklies are gone, if you need to fade in one direction or the other, you pick up some calls and you manage it that way. But you think you can really probably run through the lion's share of the rest of that over the next month and have a decent go at it. So I was thinking about doing that, and of course yesterday by the time I got around to actually putting in the order, it was like 3:05. So of course I missed it. I was like, I'm not going to work it overnight and have it work on the morning in case this thing gaps open. And then I got busy again throughout the day, and then towards the end of the day I didn't have time to put it on again today. So it's one of those things where I have all these great ideas and my time to execute them is limited. Of course, anything I would have done, I might have even faded it to the upside. I might have done the wings like 2x to the puts with the calls, just because I think RIMM's so beaten down here. I wasn't expecting a serious surprise to the downside. If anything, I expected maybe a drift to the downside. But if it's going to pop, it probably would pop to the upside. It's like a coiled spring, It's been pushed and compressed so much, it has to pop a little bit. Looks like they've given off a little bit now, trading around $8, but it's starting to get a little bit of life again. So we'll see where it opens up tomorrow. But
now it's like short putville, I think.
Yeah,
maybe for a quarter or something. Now we've got end of the quarter coming up. All these money managers are sitting on cash, and I think if no other disaster, well, I guess we kind of have like I think we have the every 2-week disaster with another riot in Europe. But that's your opportunity to sell your VIX juice.
I like your idea of the bullish risk reversal in RIMM. I like the put side anyway. I don't know if there's maybe it's kind of like Ford was when we were talking about it a few weeks ago, where you can leg into the puts and then maybe you bide your time with the calls. If you see some upside drift, then you leg into some calls. Otherwise, you just let the puts work for you for a little while.
Yeah, I like that play to get long, because it gives you a way to, we're not saying doubling down, but it gives you a shot to get longer again. If and just using some price movement silliness to kind of get in there for even or a credit on it. And if worse comes to worse, hey, you get your put premium, So I would not do that on Amazon, though.
Or Netflix or some of the others that have been interesting of late to put, or Apple, of course, or the old Chipotle The former stealth Apple has since been had his legs cut out from it quite a bit.
Apple. What's Apple in Spanish?
Is it Mela or something like that, right?
I don't know. I wanted to try to think of Apple with like Cholula sauce on it or something. It's Chipotle.
Speaking of Apple, Uncle Mike, are you still just sitting and waiting to see if you're called away? Or I mean, this thing's been all over the place lately. Have you been legging in and out of anything, adjusting your positions?
I was getting ready to roll down, but then as I was getting ready to roll down a covered call, it started going up, so I decided not to, and I'm glad I made that decision.
Yeah, Apple up over almost 2.5% today, up 16 handles to 681. So yeah, quite the mover of late. It won't let you out, Uncle Mike. It's not going to let you roll down. It's not going to let you do anything. It's going to make you roll up, and then it's going to drop the stock again, so you can never get out of this thing. That's what's going to happen.
No, it's going to expire. To make your clients another $100 on it.
It's going to expire right at 688. I can tell right now.
Yeah. And they're all going to be bummed out at you because instead of making the 80, you only made 70 because you hedged and blah 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 blah.
Do you know some of my clients?
Has the recent volatility in Apple, has it caused them to perhaps subside and perhaps even start to understand some of the wisdom of hedging downside in Apple, or are they still kind of, why are you wasting money on puts here in Apple?
A little bit of both. It changes as often as the stock changes.
Right? Yeah.
It's amazing. I've literally had very heated conversations with clients when we had a covered call go in the money a little bit, and it got heated. And then when it pulls back the next day, same person sometimes would even just say, I'm glad I listened to you. And it's amazing how it's emotional influence. That's just how it is.
That's why they hired you, because they're just too emotional to deal with. Just give them their money back. Say, you know what, dude, you don't like it? You don't like it that I make you money and keep you in the stock? Here, you can have all your money back. You go do it.
Yeah, no, it's overall a very good, enjoyable experience. No one's complaining too much on this, but yeah, it's ever since probably probably when it got to the mid 400s, there was a lot of people that stopped complaining. You know what? This hedging really isn't so bad.
Well, you can live with it. You know, it's just
everybody's happy when they're making money. You know,
it's perfectly reasonable to me, but you know, what do I know?
It's funny. You guys have a little bit of a, you attract a more self-directed clientele anyway, so you're probably on more the bleeding edge of that kind of stuff anyway. Typical financial advisor is not going to hear, why are you wasting money on a hedge? They're going to say, what the heck is a hedge? So
the typical financial advisor is buying a bunch of mutual funds that don't perform, that forgot to buy Apple.
Yeah, pretty much. And he's not hedged, and he's not really doing any sort of diversification with any sort of derivative component. He's pretty much just buying 12 or more equities and perhaps throwing in a little bit of fixed income, and if he's really crazy gold, and then he's hedged. And
well, wait, hold on a second, though. But when he's getting ready to sell, when he's thinking about puts, though, that's when he decides to sell. Don't forget that.
Yes.
Yeah, they blow everything out.
I need to reach out to that guy and bring him on this show because
we need him as a client.
So we could just hopefully he hasn't listened to any of our previous programs. I'm guessing he hasn't because he's gotten his share of heat over the past week. But I remember what panel he was on. Maybe I can find his name and reach out to him and have him illuminate for our listeners exactly why buying a put to him equates to sell all and go to cash. It's just fantastic. That's if you're looking for a money manager these days, folks. 9 times out of 10 is what you're going to get. So enjoy. Hope your money is well spent. We also had some other news that helped buoy the market a little bit today. We saw jobless claims hitting the 2-month low, which really kind of help push us a little bit north. That combined with Spain slashing their spending and perhaps leading to some more bailout talks down the road. That all combined to have us have this cheerful, pleasant green screen day for the most part. It's too bad Grigas isn't here, though. His Groupon is up, but not nearly. He's still south of where his 501 level. So
I know. I think those 5 puts again in there. I can't do it because the Zynga thing is just too raw for me.
Are you trying to push me into the dark side again with those 5 puts, Andrew? Is that what you're doing?
4 or 5 put spread. That's it.
Yeah, I guess there's a little bit of juice on those 4 puts, so you might be worth spreading it up.
Right now, nothing. But that straddle was $1 like 2 weeks ago.
Yeah, I was looking at that the other day.
It was an 80-cent iron fly, I think, for that. If you just and then you and then you let the downside fly. That was a good trade. You would have made the full banana on that one today. But what are you going to do?
Yeah, I did have some back to Groupon, and not only Grigas, but I did have some other nervous clients. I believe that was Tuesday when the circuit breakers are going off on Groupon, or the possibility of the circuit breakers hitting, when it was, I believe it was down 8-9%. I think that was Tuesday. Then it made a little comeback the last 2 days. I believe with those circuit breakers, they went to Groupon, and I'm not sure the whole story. I was reading into it a little bit that, the circuit breakers, they go down so much and NASDAQ shuts it down for an hour, but they actually went to Groupon, and Groupon pretty much told them, no, don't halt my stock. I don't know if you guys could shed some light on that.
I didn't know the list D had that option.
They did not. They do not.
No, don't. We're in the middle of a corporate action. Don't halt us. No. Let us run. I need to buy some more calls before we pop.
No.
Yeah, it was something along those lines. Obviously they cannot do that, but they were.
All right, thank you for that, Sean. And that is going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, that funky tune means it's time for the old odd block. And usually we start things off by pulling, we pull a lot of unusual activity and analyze it over at the Options Insider. Throughout the day, we have a whole team dedicated towards that. We have a lot of great contributors giving us that content as well. One of those contributors actually is OX, who puts out a midday and end of day unusual activity review. So I thought I'd kick it off with some OX unusual activity today. They start off with some implied vol movers. We had some implied vol kicking it up here in Regions Financial, ticker symbol RF. We saw this is a regional bank out of Birmingham, Alabama. The shares are up a little bit today, but options volume is nearly 8x on the day. 21,000 calls and 3,000 puts traded. This was a midday review, so this is towards the middle of the session. It's obviously a little bit higher towards the end of the day. A lot of that flow concentrated in the OX7 calls, where the volume was about 20,000 contracts. There's no real clear, at least according to the OX boys, nothing really clearly motivating this buying activity, but obviously all that buying activity really driving up the implied vol up 19% today to 36 on that strike there in the OX strike, in October in RF. So this Regions Financial gapping up, some people obviously betting.
Didn't that stock get bought out, Mark? I thought that was like a buyout possibility. TD was going to buy it out or something.
I don't know. Let me look while we're talking. Like I said, I'm pulling up the OX stuff.
Just
so
about, I don't know, maybe a year ago. But obviously not, because if there's juice in the calls, then that would be not the case.
I'm looking here as we're talking, and no, I don't see it. Not at least not recently.
It was a buyout rumor back. It was a buyout rumor in early 2008. Late 2009, I remember, back when the stock was in the $20 range, and obviously that did not happen. And once the rumor died, obviously the stock went from 20 to where we are now, fell below 10 and stayed below 10. But that is correct, Andrew. There was a rumor, and
5 years ago.
I think it was late 2008, early 2009 when the stock was in $20 range. Yeah, but there was. I do recall it.
We also had some good activity here in Decker's Outdoors, ticker symbol DECK, D-E-C-K, with some size. These are just volume signals, and of course about 25,000 contracts traded on the day, which is over 3x the ADV, and calls about almost 90% of that volume, so a lot of upside love there. Also, good old Coca Cola Enterprises, CCE, volume was up about 8x on the day, with call volume almost 100% of that activity there. So a lot of love for the upside here in some of these names. Also, speaking of upside love, we did indeed have some love here piling in for some size in a name we've talked about on the show a few times before, good old Yahoo. They closed today at $16.04, up about 3% on the day. This is the name that's doing lately close to 50,000 contracts a day. They did almost 120,000 today. A good chunk of that, 20,000 of those contracts, was in one very sizable bull call spread. Uncle Mike, how do we say bull call spread here on the show?
I don't know. How do we say it?
Forget it.
I actually, full disclosure, I have a position in Yahoo.
Oh yeah. So Andrew, is this is you then? This 10,000 lot?
No, I would not do that.
Let me run through what it is, and then.
Well, sense though actually is I'm buying juice in there, so I think it's all way too cheap.
How did I know you were buying juice? Yeah, someone came in, obviously have the same opinion as you, picking up the Nove 17-18 call spread for a whopping 12 cents. He did it 10,000 times. Obviously, this guy looking for, obviously, Yahoo closing today at $16, almost
I like
even.
that trade, actually.
Yeah, it's not a bad one if you're loving.
It's so cheap. It's unbelievable.
If you're loving, I'm not sure if I'm heavy. I like the vol tone tinge too. I'm not sure if I like if I agree with the directionality of it or not. If perhaps I would have gone maybe a more. But yes, it's an interesting trade. I haven't been super enthusiastic on the new kind of, we really don't know what the new direction is for Yahoo yet. They've tried quite a few in the past. They've had many, like 5 or 6 CEOs in the past 2 years. Their current CEO is someone who was passed over for promotion at Google before she got the Yahoo job. So interesting stuff going on in Yahoo. They've gone back and forth. Are they a content company? Are they a web services company? Are they a content company? The previous CEOs have been former producers at Hollywood studios, clearly in the content camp. Now they have a woman who's much more of a web services type of person, so it appears like they're going back in that direction. I really don't know what to make of this name. But the juice, you're right, Andrew, the juice is relatively inexpensive, so if you want to make
the company has tons of assets. I mean, it's like they're valuing the web property for what, like a couple $2 billion?
Yes, they do. That's the thing. The weird thing about Yahoo is that they have all these disparate web properties. They have things like OMG and all these other sites that get a fair amount of traffic that are actually have a lot of revenue associated with them. So they have assets. Their book value is interesting and has some value to it. What they're going to do to move the needle in the near term, I mean, I still am kind of up in the air what Yahoo is these days. They've outsourced a lot of their ad sales to Microsoft and others.
Yeah, and I think I think that like the hire was the woman from Google kind of focus these guys. They need a real sharp web person to focus the products, and they got a ton of cash to do what they need. I mean, they just sold that part of the stake in Alibaba. They still own a bunch more. If that thing ever goes public or whatever, I mean, they've got a lot of serious assets, and I don't know. It just feels like it's like that Benjamin Graham, classic, buying a company for under book value or something. It just feels very cheap.
Maybe they should go the AOL route and just become a web content company and forget all the rest of it. AOL has bought up some interesting properties over the years, like the Huffington Post and other things that get a lot of traffic, and they've rebuilt themselves into this. Yes, it's interesting to see what's going on in Yahoo. And if you're looking for some cheap juice, I suppose there are worse candidates than Yahoo. It has had a little bit of activity, a little bit of vol over the past few months. So you pick up some for cheap, you might get a little bit of bang for your buck out of it. But now we're going to close out the old odd block today with a medical device maker, Medtronic, ticker symbol NDT, up about 1% today to close at 43.48. And this one is another one where there was a lot of call love here in Medtronic, and particularly the Jan 47s. We saw, let me scroll my screen down here to see what the net number on the day was. Yeah, about 5,000 of these Jan 47s being picked up with an average price of around 55 cents a piece. So a lot of upside love for this name. This name a little bit more of a specialty name if you play in the medical devices field. You're familiar with Medtronic. My brother actually used to work for Stryker back in the day, a competitor of theirs, so I'm pretty familiar with this company. And interesting stuff going on here in Medtronic. I'm not sure how I feel about this upside. Andrew, Mike, and Sean, any of you guys watch the medical devices sector?
Not so much as I used to. As far as Medtronic, not really. Was doing a lot of AstraZeneca back in the days.
Which name was that? Try to say that again.
AstraZeneca, I believe it's called, the maker of Nexium, which
AstraZeneca.
AstraZeneca, there we go. Was getting a lot of calls, placing a lot of option trades on that stock back when Nexium was really hot. And having a friend in the industry, he was telling me why I was getting these calls, because and actually the calls were more down to the put side, because they were going to be losing the patent on Nexium pretty soon. And it was one of their major drugs, if not their major. So I don't know if they've lost the patent yet before it goes generic, but
yeah, that's the big point of risk for all those pharmaceuticals is when their big marquee drugs finally go generic. That's when a lot of those names take a big hit. They haven't found some way to plan for the future with the next super wonder drug, the next Viagra or whatever the case may be.
Yeah, so AstraZeneca pretty much all I've done. That was early in the year, but as far as Medtronics go, have not really heard too much about that on the desk.
Yeah, it looks like one guy piling into some upside, some near-term, not near-term, a little bit longer, farther out upside here. On these Jan 47s, he's got about 8% or so for the stock to run before these guys break even. Let's see, the last time the stock traded that high, over 47.5, was October of 2008. So he's pushing his historical luck, so to speak, here in Medtronic. All right, and with that, we're going to close out the old odd block and dive right into the strategy block.
The strategy block.
All right, it's time for the strategy block. This is usually where Uncle Mike comes down off his mountain throne to illuminate us about some options topic. I have this great mental image of you sitting on a mountain throne, Uncle Mike. It's kind of disturbing. But today we're going to do more of a group effort, a joint project, if you will, talking about some of the a topic that is very, very timely. Of course, dividends and how to capture them and when and why you may be interested in doing so and some of the risks associated with it. Of course, we hit on the last show about the debacle that occurred last Friday, nearly a week ago, with the SPY dividend play. Just to recap, a bunch of contracts went through in the typical dividend play fashion, looking to arb and capture what is a quote-unquote riskless dividend, and then there was a massive clearing error, appears to be over at Merrill, either $10 to $20 million error, depending on who you talk to, and those calls were not cleared and not processed and exercised properly, and so they were left holding the bag. But it rose an interesting question about, we see this every cycle with SPY, and with a lot of names, quite frankly, but SPY is a good example because a lot of people trade it. It's very liquid, very broad, and there's a regular dividend pattern in this name, yet for whatever reason, there's still a large number of people out there who don't realize that SPY has a dividend component, so they get surprised whenever this dividend comes up. And so what we saw on last Friday was kind of a confluence of dangers, if you will, because we not only had ex-dividend date on Friday, but it was also the same day as options expiration. So the importance of exercising your calls to capture your dividend and also the risks associated with assignment became much more clear-cut, much more dramatic on that Friday afternoon. So let's go into that a little bit first. We'll talk about dividends. Obviously, most of you have heard, if you're familiar with this show, you probably heard the mantra that you should never exercise your calls early. And that's typically true in 99.9% of the cases, except for a handful of very specific scenarios. And one of those is to capture a dividend. Now, why is that? Why don't you want to exercise your calls early? Well, think about what you're doing when you're exercising your call. You're actually selling out your call and you're buying stock, but you're not selling it for the price that is listed in the marketplace. You're selling it for the intrinsic value of that call. So you're surrendering in one fell swoop all of that extrinsic value that you could easily get just by turning around and selling that call out in the marketplace instead. So if you're going to exercise your call early, whatever you're going to do has to generate enough income, enough revenue to offset that loss of extrinsic value in the option. So when you're looking at exercising your call early for a dividend, that's why you're typically going to see the bulk of that activity focused in the money, and usually the deep in the money call contracts, because those are the contracts that don't have very much in the way of extrinsic value. And a good shorthand for this is just to look at the put on that same strike. If you're considering exercising your call and wondering whether it's a viable exercise or not, look at the price of that put on that same strike. If it's greater than or equal to the price of your dividend, then you're not going to want to exercise. If the dividend is substantially more than the price of that put, then it's going to be worth it. It's going to be in your favor to exercise that call. And now, depending on the size of that dividend, the question gets a little bit more muddled as you start migrating towards the at-the-money strike, because if it's a substantial dividend, what we saw last week with SPY was a 78-cent dividend, which is a relatively substantial dividend on a ETF that I believe closed at 145.87 on that Friday. So it's about 0.5%. So it was a substantial dividend. So you're going to start seeing some calls that are even near out of the money start to become candidates for exercise. And in that case, looking at what happened on Friday, stock closed at about 145.87. So on a typical expiration Friday, if you were, let's say, unaware that a dividend was coming, you could look, let's say you were short 10 of the September 146 calls. You could assume, oh, those are going to go out worthless. They expired worthless. I'm going to come in on Monday morning completely flat with no SPY position, and I will live to fight another day. And yet, if you woke up after that dividend, of course, that 78-cent dividend, those 146 calls then became very viable exercise candidates, and you now faced assignment risk to the point of perhaps being assigned on all of those short 10 calls, which of course means you woke up on Monday morning not flat like you thought, but indeed short 1,000 shares of SPY from the 146 price level. Now that could work out to your favor, but you can clearly see how if SPY gaps open that following Monday morning, how that could be a very, very dangerous position, particularly if you didn't know it was coming and you woke up surprised to be short 1,000 shares of SPY. Did you get a lot of? I'm sure you got a lot of calls on that. You talked about it on the show last week, Sean. So I'm sure you got a lot of calls even on that Monday. Anybody with those unpleasant surprises that they woke up assigned and therefore short SPY on Monday?
Yes, we did. Well, we did.
Oh, you guys did, Andrew?
Well, I didn't, but we had a client.
I know. I hope not you personally. Oh my God! There's a SPY dividend. What was I doing?
Well, there's
kind of like Apple earnings. It sneaks up on you, huh?
Yeah, those birdies. You got to watch them.
Yeah. Well, the thing is, it's hard when. That's why we like teaching. Like we have the silver course, because I want to start everybody with the basics, so they know all of the basic things you need to know before you even trade an option. And for $90, you're going to learn. I mean, I don't mean to plug it, but it's even my pros that come to us. I go, take my damn course and we're actually making it, tightening it up. But so you know all these details about exercise.
Yes, a very important thing as we saw. I mean, it doesn't happen all the time, but if you're trading a lot of active, particularly equity options and some index products, there are going to be these times when these dividends sneak up on you, and if you're not prepared for them and you don't understand, A, how to capture them, and B, the true risks associated with them. Best case scenario, you're leaving money on the table. Worst case scenario, that guy who's waking up on Monday morning short 1,000 shares of SPY, and you have a lot of unplanned risk.
Yeah, but we've had a lot, like guys have butterflies and stuff like that on where they have positions that are hedges and the market had moved up so much. When you originally put those positions on, that dividend is just a little tiny part of the calculation of the value of those options, right? But once they're, $4 in the money, that's not true anymore.
Yeah, that's true.
It becomes different in a hurry.
You've got to remember, where the balance of the value of the option is coming from at that particular time. I mean, one thing that probably Mike does is you have to be, when you trade options, it's conditional, as in what are the conditions right now that make you want to do the trade? And at that point, the dividend, one time a quarter is taking over everything else when you actually make that trading decision. So you just have to be aware of it. Or you're going to have a $24 million error. That was some poor clerk, though, that his career's over fast.
Right.
Oh, yeah. That guy is out of luck, I would hope. Just for, and Uncle Mike, I think you have, you ever walk down this road with your clients?
No, not too much, but just one thing, like when I used to, I've taught about this topic a lot years ago, and the way with which a couple of other factors that if you're on the long side of the call option and you're looking to exercise the option, if you want to make it a dollar for dollar arb trade or something like that, a lot of times in the retail world, you're never going to get something for nothing. So even if you have, let's say, a deep in the money call option and you exercise it, let's say it's 20% in the money, and you exercise that option in order to capture that dividend. Well, if that's the case, then you have to understand you're taking on the risk of that stock for that time frame. So to pay for that risk, you have to see what the cost of that same strike put option is to make it an eye for an eye type trade. The other thing you have to factor in is there going to be an additional margin requirement? So in other words, let's say that your cash is maxed out, you need to go on margin to exercise that option. What's the margin cost going to be? And also, what's the commission cost going to be? So I think that if you're just exercising the option and that's the only thing that you're doing, then you have to understand you're going to take on the price of the cost to carry. Now, I understand interest rates are pretty much anemic in this day and age, but still, it's something to look at. You're going to have to take on the risk of owning the stock instead of owning the call. And on top of that, you're going to have to pay a commission in one way, shape, or form. So I think you need to look at the whole picture. And sometimes it does make sense, no doubt about it. And sometimes it does make sense to take on the risk of the entire stock in lieu of the call if the dividend is worth doing so, in your opinion. But you need to look at the entire picture before doing it.
Yeah, if you only got $5,000 sitting in your account and you have to dump a lot of extra money in to even be able to hold the stock for a couple of days and all the other intrinsic or all the other factors that go into that kind of decision, then yeah, probably not the ideal circumstance for you. Maybe you can afford to let that dividend slide. But it's still interesting stuff. Of course, that brings us to the conversation of synthetics, which we can have for another day, but everyone needs to remember when you're exercising your call, you're selling a call, buying the stock. Therefore, synthetically, you are selling that put, so everyone needs to keep that in mind with the actual thing that you're doing when you're exercising a call. So just, we talked about synthetics before on the show. No need to beat that horse again, but an interesting thing to bring up. Always good to refresh people's memories on what they're actually doing when they're trading options. Anything you want to add, Sean, before we dive into Around the Block?
Yeah, I mean, I did touch on this last Thursday as well, and we did have a few unhappy clients as well. But being an Options Express client, we do go out of our way, not only just when you have a SPY dividend or a Q dividend, any kind of dividend, we send an email to every client that holds a stock that's paying it, that is short an option or holding a stock that's paying a dividend. We let them know a few days in advance. Now, regarding the SPY, we not only send an email to everyone, we also post it on their website below the position. So in one way, and somehow or another, you're going to know about this dividend coming out as long as you check your email or log into the website. And we did have a few clients that were very unhappy and woke up that following morning short 1,000 shares, and then they asked me, so what does this mean? Well, it means you owe $810 because the dividend is 81 cents. And why didn't you let me know? I mean, no, when we did let you know, we sent an email, and we put it on the website. So I think we go out of our way, and that's why I think it's great to be an Options Express client, because not only are we sending emails like I believe many other firms do, we also do post it under your positions page when you log in for a few days up until that ex-dividend date hits.
Yeah, there's not much more you can do except for maybe putting a massive red warning flashing thing on the screen when they're about to enter the trade, saying, "Hey, by the way, there's a dividend here. You might want to."
You need something to come out of the computer and poke them in the forehead.
Exactly, a little smack on its face.
Hey, idiot! Dividend.
So anyway, I thought that was a timely topic to discuss this week, given all the talk about dividends and about SPY and about leaving money on the table and assignment risk and all that fun stuff. It's always good to give our listeners a little refresher on how some of this stuff works so they could plan for it in their own trading. But now we're going to close out the old strategy block for this week and dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we peer into the future and let you know what's kind of on our radar for the next few sessions going into the weekend. Before we do that, we'll do a final wrap-up here on good old RIMM. And RIMM getting some more love here in the after hours. It had drifted back below the 8 handle and now rallying back almost up to 8.5, so up about $1.30 or so in the after hours right now. So some aggressive love. I guess maybe writing that time iron fly wouldn't have worked out so well unless I did overweight
like
it.
the eight call spread went out like for 12 cents or something.
Yeah.
I mean, super cheap. I love those because a lot of times you have that the weekly with the ordinary, and those time spreads are kind of forgotten because people tend to congregate in the one strike or the 1 month. So you sometimes in those little stocks you can pick up time spread for not very much money, and then tomorrow the 8 put's going to have some value because it becomes a synthetic. I mean, we could do that in a strategy block on Monday or something, but.
Yes, people always forget about those little the weeklies versus the front months and all the little fun things you can do with that stuff. Perhaps that's another strategy block we can do as well. Various time spreads and ratio time spreads you can do with weeklies. But yeah, interesting stuff. RIMM getting some life. The Canadians are happy right now. A lot of Molsons being cracked open in celebration, I might assume. Perhaps even Labatt's. I don't know what the beer of choice up near RIMM HQ is, but one of those two, I'd guess.
Yukon Jack.
Yes, there we go. Yukon Jack. So, Andrew, what are you watching for the rest of the week going into the weekend here, aside from RIMM and some weekly time spreads?
Well, I'm going to watch RIMM tomorrow now. We got some short volatility we have to close. Apple has been finally kind of caught. It's really weird. Apple always looks awful before it rallies big, and that was kind of like what we had the last couple days. So Mark went on Bloomberg TV to say sell put spreads, and the stock went up $15 right after that. It's going to look pretty good tomorrow. We had that on in our strategy letter as well for clients.
Doesn't matter on the TV because they never look back at any of the picks that they spew. They simply have people.
No, Mark's got a good track record there, though.
Oh, I'm sure. Yeah, I'm not saying Mark does it. I'm just saying I don't envision Bloomberg looking back on saying, hey, how did that trade work out? That's not exactly how those most of those shows work.
Well, I think that's the basis for a show. We got to pitch him a show on that. But anyway, but the idea is. Mostly looking for vol to get down around the 14 handle again in VIX. If the Spanish banking thing comes out, this is like one of those days I look at all my short vol positions and I'm like, well, you probably should have closed them. But hopefully, because I saw, things get so steep in the term structure, maybe people are kind of giving it up for the front month and they're going to go focus now on the back month again, which should take some pressure off some of, let's say, the October options. Which would mark the VIX down a little bit. And I think, and commodities just going higher again. They had kind of a pullback. There was that happy rally. Everybody pulled back, and now they're looking around and say, oh, wow, they're still printing money. So we could see some dough come back into that stuff as well. So, it's kind of like sort of rallying the market, volatility coming in a little more, and commodities kind of poking up till the end of the year. Election or no. So, I mean, what's Intrade say on the election right now? It's like 60-40 or something like that, Obama. So
yeah, Romney not looking too strong given all of his recent kerfuffles around him.
Well, touching on the election, what I'm looking forward to is next Friday's non-farm payroll numbers. Yep. That being the second to last non-farm payroll numbers before the election. We'll have one in the beginning of November before the election on the 11th. But the last few haven't been so hot. And as I have harped on the show the last few times, that I do think the crowd is ignorant to these poor, not only jobless claims numbers, but non-farm payroll numbers we have received in the last 5 to 6 months. Now, today we did improve a little bit over the last 2 months, but I'll be looking forward to the 5th non-farm payroll number coming out next Friday. That is the second to the last prior to the election, with Obama's lead at 60-40. That's one website, but it does seem like Romney losing ground. But if we get another bad non-farm payroll numbers, that could easily switch around and maybe light a fire underneath the Romney campaign.
it's amazing and terrifying to me that we're only 2 non-farms away from the election. It just seems like it's been so far away for so long, and now it's rapidly moving up ahead of us.
Now it ain't.
Yeah, it's terrifying and crazy all at the same time. Uncle Mike, what's catching your eye, aside from the fact that they will never let you out of Apple? Are you perhaps starting to eye Ford now that it's hovering around that 10 handle and seems to be pinned right there? Or are you going to get in, get out? What are you looking to do here?
Well, as with Ford right now, we're still short the 11 calls on it for January. We may get into a repair strategy again. It's come down. We kind of lucked out on the last one. Like you had said on the last show, it kind of repaired itself before we had a chance to really do the whole trade. So definitely no complaints by any means. But just to kind of expand on what the rest of the cast of characters said, I think it's going to be interesting to see how the debates, as we get into the debate season, how that actually affects the market, because that's when a lot of things get unveiled in terms of like what the plan is for a certain candidate. And let's say for some reason Romney does gain some ground with this. If that's the case, then what he's saying could affect the market a lot more. Or if Obama continues to keep his lead, and if he does change something in policy or something, because politicians sometimes, I know this is shocking, but sometimes they change what they say. Has anyone ever heard of such a thing?
Never, sir.
Never.
Heresy.
Not once.
I've heard of it. I've heard it could happen at some point on either side of the aisle. But with that, I'm just curious I'm interested to see how the market reacts to some of the things that are said in the debates.
Yeah, it should be interesting to watch all this unfold. I know the in-trade numbers, but I really tend to take a dim view of polls this far out. I mean, hell, they can't even predict accurately on the day of the election with exit polls who's going to win. So who knows what numbers this far out mean.
Before the last election, at this point, McCain was ahead of Obama. It's not till, that somebody caused the financial crisis to get Obama in the White House.
It's funny. You even look back to 2004. I mean, I remember watching CNN that morning of the Kerry Bush election, and there was Ted Kennedy on CNN gloating like, very excited because it looked like the early numbers that Kerry was on his way to a landslide, and of course that didn't work out. So a lot of these things change on a whim throughout the day, by the hour and by the minute. So anyone who puts any stock in polls well over a month from the event, I think you're just you're asking for heartbreak at this point.
You always got to watch out for the recounts, too. You never know about those.
Yes, Florida could swing in.
Hanging chads.
I still have fresh memories of, I was still on the floor then when all that stuff was unfolding, and that was an interesting time to be trading, because every other day it was, Gore's ahead, now we're off, now Bush is ahead, now we're rallying.
It was just the strangest trading environment, wasn't it?
There was no fundamentals anymore. Everything else was out the window. You were just completely vacillating off rumor and conjecture coming out of whatever those election rooms were doing in Florida, and it was an odd time. It was a great. I mean, if you had some positions on that could profit from vol, you did all right. But it was just it was definitely interesting to watch unfold, and perhaps a little terrifying when you're completely adrift at that point, and there's no technicals, no fundamentals, nothing to guide you. It's just the pure whim of the market.
I remember what Bill Clinton said back then. He said, "Heck, I'll still be president. I don't have a job yet." I remember that. That cracked me up.
There were rumors he was thinking about tossing his hat in again, and there were also rumors that Bush W there, he convened his council back earlier this year and had a serious look at perhaps throwing his hat back in again, which that just shows me how out of touch he must be. But
no way possible does that guy want that job again.
I don't know.
No way.
They said their reason that they had for why he was serious is that when he brought his advisors to his ranch, he ordered his favorite whatever some chain food like Fuddruckers, one of those kind of things. He always orders that when he has serious business meetings. And that's apparently what he ordered when he invited them over to discuss it, so they knew he was serious. I'm not sure if that article is facetious or not, but it sounded kind of funny at the very least. So yes, a lot of people were thinking about throwing their old hat back into the ring. I guess that speaks for the strength of the both the current administration and the current candidate. The others, old-timers, think they can get back in the mix. Speaking of back in the mix...
I would take Bill Clinton back again at this point. I just want the budget balanced. They got lost somewhere.
Maybe let's go crazy and get some crazy libertarian in there and mix it up a little bit. Let's go.
Yeah, the TARP's all paid back. They made a lot of money on it, and we still have this huge budget deficit. Wait a minute.
Yeah. How does that work?
I'm confused.
How does that work?
All this.
Well, we'll solve that problem another day because unfortunately we've come to the end of another option block. And of course, all of us here on the All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show. And I happened to glance at the numbers the other day, and it seems like for some reason in the middle of this month they're on Apple. We must have had some Apple shows because people really were going crazy for some option block this month, particularly around Apple announcement time. I guess we poked some of the Apple faithful, and they wanted to hear what we had to say. So interesting stuff going on. Of course, before we go, I want to let all of my cohorts here give us a chance to let us know what they're working on. Starting off with you, Uncle Mike Tusaw. What is coming up in the land of KYO?
I can barely stand the excitement. Mark Sebastian is coming on to our airwaves Tuesday night to talk about weekly options.
Does that mean we have to invite him on the show to do an interview too? Does that mean that we have to do now too? We have to get Sebastian on the show because all your webinar people are coming on the show for interviews.
We should.
Do I have to talk to that Sebastian guy? Is that what you're going to do to me?
It's going to be Meatball Tuesday. We're excited. So yeah, Tuesday night, folks, the Greasy Meatball Sandwich is going to kick off the new line of Know Your Options webinars. We're excited to have them. We're going to have one every Tuesday night. We're all booked up for the month of October, and we'll be revealing the future guest speakers that we have in the coming weeks.
Sounds good. I'm looking forward to it. And Mr. Lobster, what's coming up in the land of the pit aside from the aforementioned webinar?
Well, I will be doing a blog on Apple today to follow up Mark's comments. And we're going to be doing something with the T3 in New York on Sunday, October, I believe it is the October 7th. And, basically, the idea is for people that like to trade stocks, using options to kind of hedge or add a little bit of juice to your directional trading. So it gives you the ability to be a little wrong, even when you are eventually right. So that's the topic, kind of using options the right way.
So just buying juice and doing stuff, right? That's pretty much that's the strategy.
Besides just buying juice and doing stuff is still one of my favorite things to do. Yesterday was a little gift from heaven for us, which happens sometimes, that we have a chance to do stuff.
I like it. And Mr. Sean, what is coming up in the land of OX?
We at OX have 2 workshops coming up, one on the West Coast, one on the East Coast. I'm in Los Angeles on the 6th, which is a Saturday. We'll be having a workshop on mainly geared towards individuals having trouble trying to figure out how to get into a trade. And once into the trade, the mechanics and the strategies to get out of that trade. It'll be a very similar show on the 13th of October, also a Saturday, in New York. Anyone can register for these workshops at optionsexpress.com underneath the Education Center. These are on a Saturday, and these are free for anyone to come. Options Express clients are not. And I also do want to point out one thing. I've been getting a lot of calls lately. When are Google's earnings? When are our Apple's earnings? Google earnings, October 11th. Apple, October 16th. So line it up.
All right. Thank you for that, Sean. And, of course, before we go, I also want to encourage all of you out there to visit the newly revamped optionsinsider.com. We have a lot of great features for you there, including our new comment system, which a lot of you are taking advantage of, and will feature your comments and questions on future episodes. Of course, you can also reach us via Twitter at Options is our handle on Twitter. Also on Facebook, facebook.com/optionsinsider. And, of course, all the other ways you can get in touch with us here, including just sending us an email, questions@theoptionsinsider.com. If you're going to do that, then just put in the subject line question for option block so we know which show you're referring to. And with that, we will bid you adieu until next week and another episode of The Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.